Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a look at the first financial quarter earning reports for several banks, namely Republic Financial Holdings Limited, NCBFG, and First Citizens Bank Limited. Let's get straight into it with Republic Financial Holdings, and for its first quarter ended December 2017, RFHL reported, or Republic reported, earnings per share of $2.10, an increase of just around 2.9% over the comparable quarter in 2016. Driving this performance was an increase of about 3.2% in net interest income and an overall increase in operating income from about $1.2 billion to just about $1.225 billion, or 2.8% increase as well. Another positive driver was a decrease in operating expenses by around 4.5% from $697 million to $667 million, which was offset to some degree by an increase in loan loss impairments from $27 million to just around $54 million, leading to an overall increase in profit after taxes of just around 5.4%, or 362 million TT dollars. So Republic seems to be moving in the right direction with respect to all of its line items. Looking ahead, one of the major areas for concern for some investors might be its main operating jurisdiction, which is Trinidad and Tobago, which accounts for around 76% of total operating income, as well as the Barbados jurisdiction, which accounts for just around 10% of operating income. And these two economies remain somewhat challenged. In the case of Trinidad and Tobago, affected by low oil and gas revenues and general recessionary conditions, and in the case of Barbados, also facing some weaker economic growth as well. On the positive side, there are the twin Gs for Republic, Ghana and Guyana, which are expected to form a platform for growth in the medium term. In the case of Ghana, the group would have invested and acquired HFC Ghana a couple of years ago, and it's expected that this jurisdiction will continue to perform well over the coming years. Guyana, also a 4%, accounting for just around 4% of operating income right now, is also expected to do very well for the group as it benefits or begins to benefit from the oil and gas boom expected to take place over the next 3 to 5 year period. So how did Republic stack up? Well, at a price of $101.50, Republic is trading at just around the price earnings multiple of 13 times, just below the banking sector average of around 14.5 times. In terms of its market to book, it's trading at a ratio of 1.7 times, again below the sector average of 2 times, offering investors some value as a portfolio addition. It also offers a very healthy dividend yield for the banking sector of 4.3% relative to the sector average of 3.5%, and a relatively modest trailing dividend payout ratio of around 56.3%. So on account of improving operations, but tempered to some extent by the operating jurisdictions of Barbados and Trinidad and Tobago's expected fortunes, we maintain a neutral rating on RFHL. Turning quickly to NCBFG, and for the period, the first quarter ended December 2017, NCBFG reported earnings per share of just around 9.9 cents TT equivalent, a 29% increase from the prior comparable year. However, after adjusting for a significant one-off gain in the form of negative goodwill on acquisition, adjusted earnings per share was actually around 6.8 cents, or at almost 12% decline from its 7.7 cents reported in the prior period. Driving this performance was net interest income of 4.8%, gains on FX and investment activities also up 4.8%, an increase which led to an increase in operating income of just around 17%. Operating expenses, however, did balloon some 30%, leading to an overall decline in operating profit of just around 14%. Now, NCBFG has had some significant positive momentum in the past few years, both on account of its very aggressive stock price movement, as well as improving revenue streams. And as you can see, there's been relatively measured growth across all income streams, with one exception, that is gain on investment activities and income, which is that pink bar at the top of the chart. And as you can see, there was an almost exponential increase in this particular income stream over the past few years. Whether or not this is sustainable is another question, given that this source of income is dependent on the performance of capital market, the strengthening of the Jamaican dollar, etc. So on the basis of a very aggressive stock price movement, and here we can see NCBFG in Trinidad and Tobago is trading at just around 15.3 times PE, above the sector average and well above the two big banks in Trinidad, which is Republic Financial Holdings and First, and at a significant market-to-book ratio as well of 2.6 times above the sector average of 2 times. Its trailing dividend yield is also on the low side, just around 1.9%. But this could be explained to some degree by its payout ratio, which is the lowest in the sector of just around 29.3%. So on the basis of some measured growth, or muted growth rather, after excluding extraordinary items, and relatively unattractive valuations at these particular levels, we maintain our neutral rating on NCBFG. Importantly to note as well, NCBFG's offer to acquire up to an additional 32% in Guardian Holdings Limited has been extended to February 23rd, 2018 for investors on account of the group awaiting some final approvals, reportedly from the Central Bank of Trinidad and Tobago at this time. Finally, we turn to First, and for the first quarter ended December 2017, First Citizens reported an earnings per share of just around 81 cents TT dollars, a 9.5% increase from the 74 cents reported in December 2016. Driving this performance was a significant improvement in net interest income, up 11.5% from 345 million to 385 million. And overall total net income also increased 11.5% from 524 to $584 million. Expenses did increase some 2.7%, and impairment expenses net of recoveries increased some 41% from $30 to $43 million. Overall profits after tax improved from 185 million to 203 million for the quarter. Now, First Citizens has been, like Republic, doing most of the right things. Here we can see there has been measured growth and consistent growth over the first quarter periods in most of its major segments, including retail and corporate banking, where we saw first quarter growth in 2017 from 335 million to 376 million, as well as treasury and investment banking from 152 million to just around 175 million, $73 million. Trustee and asset management, the trustee and asset management segment has remained relatively flat. So in comparison to its peers in the banking sector, First does offer some compelling value, trading at a price earnings multiple of just around 12.3 times, and the lowest market-to-book ratio in the segment of just around 1.2 times. Its trailing dividend yield is an attractive 4.4%, and its trailing dividend payout ratio is just a moderate 54%. Importantly, First has recently changed its dividend payment policy to move from semi-annual payments to quarterly payments, with the next dividend payment expected sometime in February. So on this basis of continued measured growth, but again tempered by a relatively quiet outlook for one of its major operating jurisdictions, Trinidad and Tobago, we maintain a neutral rating on First. That's it for this week's edition. For more information, give us a call at 226-8773. Visit our website at www.bourseinvestment.com or email us at invest@boursefinancial.com. And for those of you enjoying the carnival season, we hope that you do have a safe and enjoyable weekend, whether you're roaming in the Soca Kingdom or just taking a rest and relaxation period that's long overdue. That's it for this week's Bourse Report. See you next week.